The surefire sign that there is a true physical squeeze going on is when you start seeing $1,000 or pardon me, 1,000 ounce silver bar premiums start to have a premium, because this is something that would typically be available at spot price. So if you see 1,000 ounce silver bars creep up to $1, $2, $3, $4 above spot, that would be a very good indication that the squeeze is truly on in earnest.
You're watching CapitalCosm. My name is Danny. It is October 30th, 2025, and today I'm joined with Kyle Horn and Charlie Horn. Kyle is the CEO of the Bullion Standard, and Charlie is also a part of his leadership team. So, gents, thank you so much for coming on the show. You guys are really doing something special over there at the Bullion Standard Pro, really something outside of the box, but we'll get into that later in the program. But first and foremost, thanks for coming on. And if you don't mind, just kind of giving us a brief intro on who you guys are, what got you into gold and silver, and we can just jump right into the action right after intros here, about a minute or so each. So Kyle, I'll let you kick it off.
Yeah, Danny, thank you so much for having us on. Thank you for inviting us on. I think this will be a productive conversation, and yeah, we're looking forward to it, man. So just to give everybody a bit of a background of me, my name's Kyle Horn. I'm the president and CEO of Bullion Standard. I've been in the industry for about 15 years now, kind of coming into the space really in January 2010 as a consequence of watching a YouTube video of something I was totally looking for, unrelated. I saw a video of a gentleman participating in an activity known as coin roll hunting. This is where you go to the bank, get some $50 coins. They come in big $500 boxes, and you could cull out the real silver coins. The very first box of $50 I got from the bank had just a little bit under $3,000 worth of silver, all the way back in early 2010. So yeah, been involved as a local brick and mortar dealer here in San Diego, California. That's where we're headquartered. And a few years ago, we started development on our own custom platform, which is now bullionstandard.com. And yeah, it's been a lot of fun. It's been a real joy to participate at the level we've been able to participate, and just bring immense value to the sector, something that's been missing for a really long time.
Yeah, awesome, man. Charlie, go ahead and introduce yourself to the audience as well.
Thanks, Danny. Thanks for having us on. I started out in business back in 2003. I've owned multiple businesses. I got into real estate, commercial, industrial, outside storage lots. I've since parlayed into mobile home parks. So my background is in real estate, but I've witnessed Kyle grow up in this precious metals space for years now, and I've learned a lot from him. I'm continuing to learn. Part of my journey here is to participate in becoming the best investor I can be as well. So I've really had a great opportunity here to participate with Kyle and be part of the leadership team, bring the spirit and vision of how do we create the win-win-win. How can we create value for everyone involved as much as we can? And so I'm just tickled to be here, and we're growing rapidly and learning lots along the way.
Yeah, so thank you guys both for making the time. Let's go ahead and jump right into the meat and potatoes here. I'm going to pull up the gold price chart. This is the spot price gold chart, and we are currently trading at $4,023. And you can see here we have come down. We came down from the top. We bottomed at around $3,900 or so. That was about a 10.5% correction. And yesterday we had the announcement from the Fed, another round of rate cuts. And as a result, today it's shot up. We've shot up from $3,920 up to $4,023, $92 up today. What are your thoughts? What do you make of these price corrections here, Kyle? Has gold gone up way too fast in such a short amount of time that it needed this correction, or something else happening? Kind of let us in on some of the action that you're seeing on the ground as a bullion dealer. So what do you see happening?
Danny, I've been in the market for about 15 and a half years. And I like to say that we are living through one of the greatest experiments in recorded human history. What do I mean by that? I mean, we're living through the post August 15th, 1971 world where gold no longer has any monetary connection to the dollar at all, i.e., that Sunday night on primetime television where we call him Tricky Dick Nixon disconnected the final convertibility from gold into dollars. And so what has happened since then? What has been a consequence since then? Gold has gone from a price fixed $35 to it peaked out at about $4,300 a few weeks ago. This year particularly, and as someone who's been in the market for about 15 and a half years, I was around for the blow off top in April 2011 of the last bull market, Danny. What I've observed this year in 2025 is nowhere near close to even what was happening back then. I would describe 2025 as being a C paradigm shift in the terms of gold ownership and gold's role as a monetary metal. I could further expand that by saying, obviously gold is up massive this year. The dips have been very shallow. They've been aggressively bought. And I continue to expect that to be the case going forward. I don't think we're topping off here. I think gold has a long way to go. And I also want to expand on that by talking about this really interesting statistic that puts it in perspective. Danny, one of your guests, Rick Rule, by the way, if anybody ever has the chance to meet Rick Rule in person, I would highly recommend it. We've met him a bunch of times, and he is just one of the most prolific, well-voiced speakers in this space. Rick talks about a very interesting statistic, and nobody else really talks about it. And I want to expand on that a little bit. Rick talks about the fact that according to the commodities trade desk at JP Morgan Chase in New York, several years ago, not in recent time, but several years ago, it was purported that the 40-year mean allocation of precious metals and precious metals related securities relative to all US savings and investment assets, so the total market cap, about 2% comprised the total pie. That number, obviously a few years ago, fluctuated between 1/3 and 1/2 of 1%. So this would include everything like bullion, physical trusts, mining stocks, everything that could be considered a precious metals investment. Okay. And so we solicited an advisory firm earlier this year who writes reports for central banks. And it was purported to be about 1% in February, still very, very low. Going back to 1980, Rick talks about the fact that there wasn't enough data around for JP Morgan to compile the data back then, but it was believed that it was between 6 and 8% in January 1980 at the peak of the first real precious metals bull market. So Danny, something else happened this year too that I think a lot of your guests have probably talked about, and it's probably gained quite a bit of attention. The CIO of Morgan Stanley, Mike Wilson, has recently come out in September and said, hey, this 60-40 portfolio that's been the bread and butter of the investment world for 40 years now, that might need to change. Well, what do we mean by that? 40% debt, 60% equity. That might need to change to 60% equity, 20% debt, and 20% alternative assets. That would definitely include things like gold. So if we're somewhere between 1% and 2% allocation relative to the broader market right now, and people were to allocate in the way in which Mike Wilson talks about, I'll leave your imagination open and let it run wild with what could possibly happen to the price of precious metals, namely gold and silver. I think we're in this very interesting circumstance today where, like I just mentioned, it's a paradigm shift. That's what we're observing at Bullion Standard. And if this trend continues, which I believe it will, in the next 5 to 15 years, something like that, I expect precious metals prices to just go absolutely ballistic.
Yeah, to kind of exemplify and kind of hearken to what you just said here, Kyle, this is a chart of gold relative to the S&P. And what you'll notice is that this is where we're at today. So gold is severely underpriced relative to the S&P. And in fact, if you do a little technical analysis, if you draw a line through here, I mean, this looks like a consolidating pattern to the upside. And it doesn't really take much to get the gold price moving from this this relative capital allocation. So much is allocated into the general markets today that even if a fraction of that capital just came rotating into an asset like gold, granted, it's a $30 trillion plus asset, but nonetheless, the markets are much bigger than that. Even going from where we're evaluated at today, I think we're indexed at about 0.6. If you just retrace back up to this resistance line, that's a 116% increase just to get back at parity to that resistance line, assuming that the S&P stays constant. Now, if the S&P goes up as well in tandem, that would imply a much higher gold price relative to that. So, Charlie, I want to get to your thoughts on this as well. What are you seeing out there? Being in the unique position that you're in, as well as a stacker of precious metals as well. What do you make of this era that we've now found ourselves in? Gold at all-time highs or near all-time highs. I mean, it was just bonkers a couple of weeks ago. What are your thoughts here, Charlie?
I like to take a very high level look down on what's exactly happening. And so, people talk about the market, they say Mr. Market. And, what I've come to realize is the market is a bunch of people transacting. It's this animal spirit, if you will, inside of each of us. So I like to look at the human behavior behind, what's going on here. And that you could correlate human behavior and volatility, and you could look at the macro, but from a biological point of view, what is really interesting, and we were just talking about this before we started recording, I'm right in the middle of Neil Howe's new book, The Fourth Turning is Here, where he structures the framework of the four turnings. And I won't get into it too deep, although we could spend hours talking about it. But we're inside of the fourth turning that the crisis point is estimated to be 2028 to 2032. And so, I don't know what you guys think about the price of gold in crisis, but, it seems to be like we've got a long landing strip for the bull market in gold. And, one thing that I really like about the framework that Neil puts in is, is that going to change? Is the generational cycle going to change? I would say no. I would say no, because no one's figured out how to change, the human reaction. So when you look at parenting styles and you consider the parenting styles of each generation, and say, well, if one parenting style was, we'll call it overprotective, and that parenting style created the possibility for the good times to be manifest. Well, that seems to be the cycle that Neil Howe is, spelling out in his book. And the reason I bring it up is it seems like we're pretty reliably going to cycle through these different turnings, as he calls them.
And so it kind of begs the question, if we are going through another fourth turning, when was the last fourth turning? And what happened to the price of gold? What were the assets that went up in value during the last fourth turning? And so I'm going to ask you the question, Charlie. When was the last fourth turning?
Yeah, I'm still putting all the pieces together for myself, because I really want to take a deep dive into this and understand it fully. And I'm no expert. But as I sit here today, I'm pretty sure the last fourth turning was World War II.
Yep.
And then
there it is.
boomers were the folks that were beneficiary of that crisis. And so we've been inside of, appreciation in assets. I mean, as far as gold, we'd have to go back and take a look.
Yeah. So this is where the fourth turning is on that chart, on this gold to S&P chart, is when the gold outperformed the S&P between 1932 all the way out until 1944, World War II. Mm-hmm. And, you fast forward to today, we're just getting off the mat here. Now, am I saying it's going to go back up to this ratio here? No, absolutely not. But it doesn't have to. Even a fraction of that ratio being captured is monumental for gold. So you bring up a very great point, Charlie, because we always would like to look at history as a past, past performance isn't always indicative 100% of future results, but history does rhyme. We talked about this the last time I interviewed my good friend Chris McIntosh on this show. And, you look at these fourth turnings, and throughout history, it's always a big price appreciation in gold and commodities and, other natural resources. So will this time be any different? That's kind of verboten to say as an investor. I mean, what are your thoughts on that?
Well, I also like to, I'm going to kind of go on a little bit of a tangent here. I also like to, follow the macro economists, and, we could also look at what's happening right now, in the treasury market and the bond market. Some people have said that Trump wanted to come in and create this austerity, if you will, and tried to do Doge and cut some spending. We've got these massive deficits and debts. Some people say that he broke the bond market, and that there was some signaling there that created the shift from austerity back to grow and print. And so grow is the next phase. And, if we grow out of the massive debts and deficits, then we wouldn't need to print. I don't know how many people out there are optimistic about that, but we can conclude, if we get into the print phase, what will that do to the price of gold?
Yeah.
I mean, we'll have some inflation. We'll have some debasement of the currency. I think in addition to the rate cut, we also had some signaling for the end of QT.
Mm-hmm.
So, what's that going to do to the price of gold? This consolidation or this pullback in the price could be a healthy consolidation. No one knows the future. We can't predict anything, but we can say that the tailwinds are lining up nicely for, if your investment time period, your outlook, your horizon is over the next, 2 to 5 years, you might not worry too much about the short-term pullbacks or consolidations.
Yeah. So here's a chart of the 10-year yield. This stretches all the way back to 1963. And you can see we've been in a downturn in interest rates since the 1980s. And it wasn't until 2022 that we broke out of this downtrend in long-term interest rates. And ever since then, that appears to be when something broke, right? That's when gold bottomed and began its ascent to where we are today. We did see a bottoming in gold around the same time as when this chart broke out. So, Kyle, I want to tie this into what we heard from Fed Chair Jerome Powell yesterday. Another round of rate cuts, 25 basis points this time around. But what's interesting is that when he announced these rate cuts the other day, I'm going to pull this up on the daily. The 10-year yield spiked up today. So that's really weird. Why is the long end of the yield curve and the short end unresponsive to one another? It seems like investors are not buying what the Fed is trying to sell.
This is a great point, Danny, and it really puts it into perspective. And I actually have a lot to say on this. If we look at that chart again, you can see where interest rates peaked out. I have a graph of this myself of the 30-year Treasury, and we could say that when interest rates peaked, that kind of coincided with peak prosperity anyway in the U.S. And so there's been this continual. I would say that's a pretty steep downtrend line that you could chart on the tips of those peaks going over a 40-year period. So yeah, it's been a continual, I don't know, 45-year decline in interest rates. No one's really needed to own gold and precious metals because you could just buy treasuries, and treasuries continue to go up. Interest rates continue to go down. This is not positive for gold. And so what's happening now, I think, is, it could be said that every Fed meeting is the most important one until the next one. And so what I've observed is that the bond market is calling the Fed's bluff that we're going to start lowering interest rates. It's a very interesting dynamic, as those two markets usually trade in tandem. If the Fed starts lowering interest rates, certainly you would expect, especially the 10-year Treasury, to start trading down with it. We could look back in history in the decade of the 1970s and see that there were these waves of inflation. Why were there these waves of inflation? Because the Fed was pulling all kinds of levers back in that decade, lowering, raising, lowering, raising, lowering, raising, which caused these boom bust periods and caused these waves of inflation. I have a belief that we've just went through this first wave of inflation in a period that's very reminiscent of the 1970s, when the CPI peaked, I believe, at 9.1 or 9.2 in June 2022, I believe it was. And so what I expect going forward is a second wave of inflation, very reminiscent of what happened in 1974, 1975. So I think that the Fed is trapped. I've always had this belief that it's either death by inflation or death by deflation. And I think they're going to choose death by inflation, i.e. we debase all of our obligations, i.e. we print money out of thin air. Conjuring up something out of thin air, is not good for anybody. So, yeah, I have a belief that we're just going to be in for it. And, how do you protect yourself as best you can from that? You own assets that are outside of the system. Hence, maybe why Mike Wilson, CIO of Morgan Stanley, said the death of the 60-40 portfolio, in my words, might be needed here, and we might need to start allocating into other alternative investments.
Yeah. But before I get to my next question, I just want to give you guys props, by the way, on what you're doing. It's no secret. You guys, the Bullion Standard is the official sponsor of, official Bullion sponsor of this channel. But the reason why I reached out to you guys to form this partnership is because you were really doing something unique and outside of the box, that I haven't really seen any other bullion dealer do this, and that's offering gold and silver at cost. Go ahead and walk us through how exactly is this possible, Kyle? I mean, how are you guys doing this?
Yeah, that's a great question. And Danny, thank you for collaborating with us. We appreciate you too. We have a message. We have a belief that gold can be democratized the same way that stock trading was democratized in the 90s. The speed and the way technology travel these days kind of make what we're offering a reality. And so I'll go into that a little bit. But essentially what we're doing is we are aggregating live market maker bid and ask product pricing, not spot pricing, but actual live product pricing set by the market makers themselves. This is known as the collective group of wholesalers. This could be a mint, this could be a distributor, this could be one of the authorized purchasers of United States Mint bullion products. This group of players in the industry is collectively known as the wholesalers. To be able to transact with them, you typically need to be a dealer, a coin shop, a retailer, a family office, maybe an institution. And so there's really two markets, just like any industry. You have wholesale and you have retail. Our philosophy has been, hey, there's an opportunity here to let everybody have access to the market price, not a dealer's inflated retail market price. And so, yeah, this kind of creates, in essence, we like to call it the stock market for bullion, where you would be able to log into our platform, visit a product page, and you'll see a bid and an ask price, just like you would a stock ticker. And that price is dependent on, hey, which of these market makers has the lowest ask price if you want to buy, which of them has the highest bid price if you want to sell. And so it's almost like a level 2 for bullion. Kind of like a stock platform. we aggregate that pricing and display it as our pro member pricing in a consumer retail friendly way. So yeah, it's a monthly membership product. It's called Bullion Standard Pro. Obviously, we offer retail pricing too. We're very proud to say our retail pricing is in the top decile, or the top 10% of best pricing amongst any publicly facing online bullion retailer, which is something we track aggressively. I've been in the market for 15 years, Danny. I've observed over time what typical bullion consumers, what their challenges are, what they want. And certainly it's like proposing the following question. I have a belief gold is a tier 1 asset. It's a real form of money, which begs the question, how much would you pay for $100 worth of money? Would you pay $110? Would you pay $150? Would you pay $1,000 for $100 worth of money in terms of some of the very large predatory IRA dealers? Bullion Standard Pro gives anybody and everybody the ability to buy or sell $100 worth of precious metals for as close to $100 as the market dictates. What do I mean by the market? The collective group of industry market makers who literally set the price and have the very, very tight bid-ask spreads on all of the very popular bullion products on over 3,000 SKUs. And not set by a retailer who would charge an exorbitant or egregiously high markup. So that's a little bit about Bullion Standard Pro. We want to empower everybody to be the best versions of themselves possible. And certainly that doesn't happen when you're paying $1,000 for $100 worth of money. So yeah, thank you for letting me riff on that a little bit, Danny.
No, for sure. Charlie, anything else you'd like to add to what Kyle just said?
Well, I think at the core of it, what we're really doing here is we're trying to support as many people. And Danny, we're grateful for you. We're grateful for your listeners and viewers here as well. We want to support as many people to create as much foundation in their life as possible. And this opportunity with Bullion Standard Pro is a way to support your financial foundation. Instead of it eroding a little bit with every purchase or sale, you can retain as much value as possible. And so we have a view that if the majority of people can have a strong financial foundation, everyone's experience of life gets a little bit better. There's a little more stability in our driving down the freeway because we know that we've got a little bit of seed coin that isn't eroding. In fact, for the next few years, at least it seems, it might be appreciating at a pretty fair rate.
Yeah, because here's my thinking, guys. Like the gold and silver market is very unique in the sense of you have multiple prices for the same good, for the same ounce or product or whatever. You've got the spot price, which is akin to the wholesale price, and then you've got all of these different markups that you may see depending on where you go to buy that product. And I mean, I can't help but think that eventually over time, there's only going to be one price, for an ounce of gold, one price for an ounce of silver, and similarly, one price for a product. I mean, do you guys see it unfolding that way as well?
That's a really big question, Danny, and we could talk a lot about on that just due to the nature of the market as a whole. It's fragmented, right? Everybody who's a participant in the market who sells physical gold bullion products, retail denominated gold products, anything that's not a 1,000-ounce silver bar or a 400-ounce gold bar, really, they all have their own pricing. And it's a free and fair open economy. People can charge what they want. Takes two to tango, obviously. And, it's a free market. But yeah, what you just said is exactly right. Given enough time, given enough ways in which systems and processes become more transparent, in which the speed and information travels, specifically around technology, I have a belief what you just said will absolutely be a reality. I don't know when that will happen, but that's definitely the trend. We're observing this right now. The industry is consolidating. big industry wholesalers are buying up retailers very quickly. And so they all want to vertically integrate and just kind of run the entire chain of command. So yeah, given enough time, I think that there will just be one price, kind of like a stock market. Yeah, so that's kind of my belief around that, Danny.
Yeah, I mean that's why I was, super excited to get this partnership going with you guys, because I sense that you guys are fairly ahead of the curve relative to anyone else. So super stoked to offer my audience a 10% off discount to their first month membership on the Bullion Standard Pro. You'll find that link in the description box below, and you've got to type in the promo code as well, COSM10. It's COSM 10 at checkout to get your 10% off discount. So if you're a frequent buyer or a first-time buyer or a buyer of any kind of gold and silver, I mean, this is something that is kind of a slam dunk if you're buying at a decent enough quantity. I mean, I think it's like, insofar as you buy like one, what is like one gold eagle essentially pays for itself, multiple months of membership, a silver, how many silver rounds or eagles do you need for the membership to pay for itself? I think it's like only a small handful to pay off the membership and things like that. All of that's on the site, by the way, guys. So you can kind of look at the price and see if it makes sense for you, which I don't see how it wouldn't. But again, link is down below. Check it out. Highly encourage it at the very minimum to peruse the website, peruse the offer, and keep it on your radar screen the next time you're in the market for gold and silver. Guys, I want to shift this over to, unless there's anything else timely happening right now in the gold and silver market that you want to talk about. I want to talk about your philosophy on how you stack. Is there like a certain cadence as to how you stack gold and silver? Is it every month? There's a certain percentage of your allocation each month. What's your general philosophy in saving in precious metals?
Dan, I'm sorry to cut you off, Danny. I actually wanted to just talk about one more thing in regards to Bullion Standard and our membership product. Would that be okay?
Yeah, go ahead.
Yeah, totally up to you. I wanted to share maybe a little bit about what we're up to and what our greater ambitions are here. We are under development right now with, I'm calling it the Bloomberg terminal for bullion and precious metals. What do I mean by that? I mean, in addition to offering direct-to-consumer wholesale pricing on over 3,000 bullion and precious metals products, we have aspirations to be the true all-in-one platform where the rubber truly meets the road, where you would get value out of being a part of our community, whether or not you're making a bullion trade or not. I'd like to talk about some of the things specific to that. As a part of this data and analytics suite we're under development, we'll be offering a live, true portfolio type experience the same way you would enjoy with your stock brokerage account. Maybe like you have Charles Schwab or Robinhood or Interactive Brokers, something like that. You're going to have a portfolio tool where you'd have the value be based on the live bid and ask product price specific to each product rather than the spot price, which is some of our competitors offer something like this, but it's typically based on like their own retail price instead of like the true bid price. We're going to have a historic product premium tracking tool where you'll be able to go back in time up to 15 years and look at the product premium on all of these products. We're going to have a bid ask spread comparator tool where you'll be able to sort every single SKU in our catalog, look at those products which have the tightest spread, which would arguably offer the best value when you go to resell them. Look at the products which have the highest spread. And most importantly, in addition to a few other cool things we're going to have a direct data connection to the wholesale market itself, where all of our members would be able to see in live time what trades are happening, how much metal is being bought or sold. If somebody chips off a $5 million lot of Silver Eagles, you'll be able to see that trade. If somebody is buying platinum or selling platinum, you'd be able to see that trade. So basically, Danny, we want to bring complete transparency to this otherwise opaque market and truly give everybody the same level of access to which that demographic that I spoke to, family offices, institutions, dealers, retailers, everybody will have that same level of access, and arguably even more than actual dealers themselves. So we're really proud of that. We have a belief that, this market is just serially underserved. And I think a lot of people will get a lot of value out of this offering, in addition to a couple other things, including community features we'll be rolling out. We're going to have a live members webinar with an industry analyst or newsletter writer specific to the bullion and precious metals industry, where all our members will be able to ask questions to in live time. And so, yeah, man, we just want to have this complete all-in-one platform type of experience, and put that behind a very nominal monthly membership fee. And we just want to deliver immense value, unbelievable value to somebody, whether or not they make a wholesale bullion trade or not. So yeah, thank you for letting me riff on that. Obviously we want to just, completely democratize the way this industry has been moving. And so with the way technology has been advancing in recent years, makes this a reality.
Yeah, I mean, it's you're disrupting an industry that's poised to be disrupted. So if I was wearing the hat, I would tip my cap to you. So well done, good sirs. Let's go ahead and before we wrap up here, I'm just curious, like how you guys stack gold and silver. Though I know it might be a little different as a bullion dealer, but do you guys like have a certain philosophy in terms of like how you add into your portfolio? How you add into your stack? Charlie, I'll let you answer first, and then I'll move over to Kyle at the end.
Yeah. So for me, one of the things that I really love about precious metals is the ease at which I get to sleep at night, knowing that in a black swan event, I can bridge a gap between then and, whatever it takes to get through whatever's going on. So, I like to refer to it as, my quote unquote go bag, and that's the thing that lets me, sleep well at night. And then the rest of it is a way to insulate from the debasement of the fiat currency. I also enjoy the leverage of mining stocks. Mm-hmm. So, Kyle and I have been, mainly have been in an educational process for the last couple of years. And, part of Bullion Standard Pro and the subsequent additional memberships that we'll be offering is to create an opportunity to share that education. When Kyle and I talked about mining stocks years and years ago, I said, Kyle, tell me which stock to buy. And he's like, Charlie, let me tell you some things. And I say, well, just tell me, what stock are you buying? Well, Charlie, let me just tell you some other things. And basically, he wouldn't give me the right answer that I was looking for. Come to find out, there is no right answer. Maybe the right answer is educate yourself and become the person who knows what method of investing and how much that for you personally, should and could take on.
Yeah, it's with all sorts of aspects of portfolio allocation, the types of investing that one partakes in. It should be more of a reflection of their own personality, their own temperament, their own levels of neuroticism. You don't want to be waking up in the middle of the night checking your portfolio because you're over leveraged or you've got an oversized position here or there.
Danny,
so
I went through that phase as well. Yes.
I think we all did at one point, didn't we?
Everyone
Kyle,
needs to.
Yeah. Kyle, your response.
Yeah, just to comment on that, what Charlie just spoke to a little bit. What I like to say is nobody can tell you what to do. Nobody can tell you what metal to buy, what stock to buy. This is something that you have to develop conviction for yourself, develop a thesis, understand and know why you would buy something. Because if you don't, and if you make that purchase or make that trade, you're just going to get shaken out. This is market psychology 101, what Ben Graham talks about in his infamous book on the Mr. Market chapter. So yeah, you have to really know and understand why you would want to own something, and kind of take it from there. But just to kind of go back and speak to what you asked me before, what is your stacking philosophy or something like that, Danny? I'm a traditionalist. I have a belief that there should just be a core handful of products when it comes to bullion ownership. In fact, to share an interesting data point with you, not many people out there would realize that the majority of bullion sales are made up of just a handful of products. Literally 80% of all bullion sales. 1 ounce silver eagles, 1 ounce silver rounds, 90% silver junk silver minted prior to 1965, stuff like that. And then for gold, obviously a 1 ounce gold bar and an assay card, 1 ounce gold eagle, 1 ounce gold Krugerrand. Maple leaves are right up there almost, but yeah, just those core products. So I have more conviction for silver than gold right now. So my thing is going to be silver eagles every day of the week. I believe that silver eagles are the most popular silver bullion product on the face of planet Earth. And not surprisingly, Danny, in the past 5 years, in these volatility fueled bits that we've gone through, namely March 2020 when the market collapsed due to the COVID hype, again in the silver squeeze of February 2021, the summer of 2022, and during March 2023 during the Silicon Valley Bank failure. Those products, specifically silver eagles, went in excess of over $20 per ounce premium. This is due to the fact that not a lot of people would realize the market for good finished retail denominated bullion products is finite. And when demand exceeds supply, premiums go ballistic. I fully anticipate and expect that to happen again during the next fear-based buying event. The two products that appreciated the most on a percentage basis were silver eagles and also 90% silver minted prior to 1965, so 1964 and prior. Dimes, quarters, and half dollars. Mega appreciation on those products. So much so, Danny, that in March of 2020, even when the spot price of silver collapsed to about $11 and change, if you own silver eagles, the value of your physical actually went up because the premiums went up so much more than the spot price declined. Just fascinating, right? And so, well, why is that? It's because people want their metal. There's an old adage, you probably know this, everybody on your channel has probably said this: if you don't hold it, you don't own it. And so gold is the ultimate asset to own that has no counterparty risk. It's not a promise to pay. It's not a bond. It doesn't pay a coupon. It's payment in and of itself. And so everybody would be well served to have some that they can hold, that they can touch, that is not in a vault, not an ETF, not a mining stock. So that's my belief. I'm a traditionalist, just a couple products. And yeah, that gets the job done every day of the week.
So last week and the week before last, we had this episode of backwardation between the futures price and the spot price in silver, where it actually cost more to buy the silver today than it did to buy it in the future. Now, is there a signal that'll tell us that we are on the precipice of an imminent shortage in silver? Is it tied to the premiums to silver eagles? Is that something we can ascertain? Is there anything we can ascertain as a signal of sorts to tell us that there's a shortage right on the horizon or so?
There is, and I very rarely hear anybody talk about this. And so I'd be very excited to say what I believe would be an imminent signal that there is a true physical squeeze in the works. So let's recall that the market size of the good finished retail denominated bullion products is just a couple $2 billion available for sale at any one time. So it doesn't take much buying pressure for all these products to get wiped out, and then all of a sudden your silver eagle is bidding for $20 over spot price. Juxtapose that to the size of the market of the true precious metals market, which is the big 1,000-ounce silver bar, 400-ounce gold bar market, which is in the trillions of dollars. The surefire sign that there is a true physical squeeze going on is when you start seeing $1,000-ounce silver bar premiums start to have a premium, because this is something that would typically be available at spot price. So if you
Right.
see 1,000-ounce silver bars creep up to $1, $2, $3, $4 above spot, that would be a very good indication that the squeeze is truly on in earnest.
And was that happening to at any capacity a couple of weeks ago during this episode of Backwardation, or was it still not there?
That was not happening a few
Okay.
weeks ago, Danny. That happened in March 2020, though. So
Okay.
that was the last time we really saw that kind of activity. 1,000-ounce silver bar arguably should be able to be bought and sold within a couple cents of spot price, 10 cents, 35 cents per ounce, something like that. So yeah, that's a good indicator to watch out for, but did not happen in recent time. I think there's a lot of hype around, what has happened recently, and there's a lot of misinformation around it. But yeah, basically the London market, it was an arbitrage opportunity. And so people started shipping the metal over to London from New York and from Chicago.
Interesting. Is there a similar sign that we can juxtapose on gold as well?
Well, gold is a much larger market. So I think that's a bigger question than I am. Yeah. I think that's, I don't know if there's ever been really a premium for the big 400-ounce gold bars, but just because of the size of that market, I do not know.
Gotcha. Well, gents, it's been a fascinating discussion. I'm sure we'll have more down the line as well. Thank you so much for your time. Anything else that either of you guys would like to bring up or talk about before we bring this thing home?
Danny, I just want to say thank you, sir. We are grateful for your time. We're grateful for everyone's time who's watching this right now. One of the things that we just wish for everyone is to, do what you can to learn what there is to learn and put yourself in the best position possible.
Totally, 100%. I mean, knowledge is the one thing they can't tax from you or take from you. It's insofar as you retain it, right? So great words there, Charlie. Kyle, anything else you'd like to talk about, bring up that we didn't get into before we sign off?
I'll just wrap up, Danny, by saying we really appreciate the opportunity. We appreciate you for letting us come on and talk a little bit about all this stuff. And yeah, we'd absolutely love to come back on in the future. We think we have something to offer that not a lot of people have to offer. So, I have a belief that the market is rife for change. And I think a lot of people will get a lot of value out of it. So in addition to that, I just kind of want to echo my thought that I said earlier. 2025 is shaping up to be, I believe, the inflection point to where precious metals start to become in favor and popular again, going all the way back to the 1970s. That's what it feels like to me. That's what we're observing in live time. Of course, I don't have a crystal ball, so I'm not willing to make a grand prediction on how things will go, of course, but just kind of being in the day-to-day kind of stuff in this market, this is a sea change year. Absolutely. So I would just, keep that in the back of your mind if you're, interested in what I'm saying right now.
Yeah, there's definitely something in the air. I mean, I've got two balls, but neither of which are crystals. But you can see that there is a sea change, point of fact. Guys, thank you so much for your time. And if you enjoyed this podcast, drop us a like and comment. Go Kyle, go Charlie, go in the comment section. And again, take advantage of the 10% discount in the description box down below for your next big gold and silver purchase. We've got the special link in the description as well as the pinned comment. And then we've got the COSM10, COSM 10 promo code to use at checkout to get 10% off your first month. So highly encourage you guys, check out the Bullion Standard Pro. And subscribe to the channel if you haven't already. And by liking, subscribing, commenting, becoming a member at Bullion Standard Pro, all that stuff helps in promoting and pushing and supporting this channel. So if you'd like to help us out, whether it be through YouTube, liking, subscribing, commenting, all that stuff helps. If you'd like to help us out and support us monetarily, then becoming a member at the Bullion Standard Pro also is a way to pay it forward and get a cool product in return. So a win-win. So
One
Much
last thing I'll
thanks.
say too. Sorry, didn't mean to interrupt, Danny.
No, go ahead. Go ahead, Charlie.
You know, the Boolean Standard Pro isn't necessarily for everyone either, and that is no problem. But our invitation is, you know, take a look and see if it would be of an advantage for you. You know, that's our offering.
Boom. There you go, guys. Well, thank you so much for your time. Thank you for watching, and I will catch you later. Till next time. Bye.
Thank you, Danny.